Well, stocks are up modestly this week on light volume. We're going to talk about that in just a little bit. We're going to have a giveaway here at the end of the show, and you're not going to want to miss that. We're going to start this week with the economic mechanics by first looking at the U.S. dollar. And the daily chart of the U.S. dollar shows 0.1. The stochastics are positive, but they've been oversold for quite some time, so we gave it a green mark. Up on top, 0.2 shows us that we have been in a downtrend here since 2011 started. And we remain in that downtrend, although we're up against it right now to see if we can break through some resistance. And a look at the MACD shows they're trying to turn positive as the black line is attempting to cross the red. Histogram bars are just above zero right now. We gave this chart a yellow mark. And up top, the relative strength index is neutral. It's got a little resistance ahead that we pointed out. We gave this one a yellow mark as well. And a look at the weekly chart, the stochastics down below at 0.1 shows that they turned positive, but they are in deeply negative territory right now. So we gave it a yellow mark. We're waiting to see if we can get past that 20 line before we can see if this is really going to be bullish or not. And a look at the MACD shows they are still declining a bit, but they are rather flat. Histogram bars were also flat, and they're negative too. We gave this one a red mark. And a look up top at the relative strength index shows that it's still in decline, but it may be leveling off a bit here, so we went ahead and gave this one a yellow mark. And so summing things up for the US dollar, we analyzed daily charts and the weekly charts. On the daily charts, we found the stochastics were positive, we gave them a green mark. MACDs and the relative strength, they were neutral, so we gave those a yellow mark. On the weekly charts, stochastics were neutral, we gave them a yellow mark. MACDs were still negative, so we gave that a red mark. And the relative strength index was neutral, we went ahead and gave that a yellow mark. For a total, we had 1 red mark, 4 yellow marks, and 1 green mark. And we'll take a look now at the commodities represented by the CRB Index. And a look at the daily chart of the CRB Index shows 0.1. The stochastics are positive. They may be losing a little bit of steam here, but they are climbing toward the 80 line. Still looks good here, so we gave it a green mark. And a look at the MACD shows they're turning bullish as the black line is crossing the red. And the histogram bars are climbing above zero. They're just above zero right now, so we went ahead and gave this one a green mark. Up top, the relative strength index is continuing to climb. It's trying to get above that 70 line there. We gave this one a green mark. Weekly chart shows a different story here as the 0.1 shows stochastics are falling from overbought territory. Got a negative signal here, so we gave it a red mark. Up top, we see we still have that resistance up at 375. We're trying to make an attempt to climb to that area here. I don't know if we're going to make it or not. Things are starting to weaken here as we're getting strength in the dollar. And a look at the MACDs. They're positive but weakening a bit here. And the histogram bars, they're flat but positive too. So we went ahead and gave this one a yellow mark. And up top, the relative strength index is still positive in overbought territory, but we gave this one a green mark. And so summing things up for the commodities, CRB Index, we analyzed the daily charts and the weekly charts. On the daily charts, things look good. Stochastics, MACDs, and relative strength index were all positive. We gave them all the green mark. On the weekly charts, though, the stochastics were negative. We gave those a red mark. MACDs were neutral. We gave that a yellow mark. And the relative strength index was positive. We gave that a green mark. Overall, we had 1 red mark, 1 yellow mark, and 4 green marks. And take a look now at the 10-year Treasury yields. And the stochastics on the Treasury yields here are looking positive. Down as 0.1 is showing. We gave it a green mark. And up top, 0.2 shows we're back in the previous trading range that we were stuck in for a while back in December. MACDs have turned positive as the black line crossed over the red line. And the histogram bars have rose just above zero as well, so we gave this one a green mark. And up top, the relative strength index shows it's against minor resistance up there, so we just went ahead and gave this one a yellow mark. And the stochastics on the weekly chart shows that they're still negative and they're declining. Looks like we still have a way to go down on interest rates. Up top, 0.2 shows we're back in that weekly trading range again. We'll see if we can hold here. And the MACD shows that they've just turned bearish, and the histogram bars are looking a little weak. We gave this one a yellow mark. We're going to wait and see this week if the daily charts can start to have an effect on the weekly charts of the MACDs here. If they don't, this is going to turn red real quick. And up top, the relative strength index has been declining for a while, but is bouncing off at a 50 line, so we gave this one a yellow mark. And so summing things up for the 10-year Treasury yields, we analyzed daily charts and the weekly charts. On the daily charts, stochastics and the MACDs were positive. We gave those green marks. Relative strength index was neutral, so we gave that a yellow mark. On the weekly charts, we found stochastics. They were still negative and declining. Gave that a red mark. MACDs and the relative strength index were neutral, so we gave those yellow marks. Overall, we had 1 red mark, 3 yellow marks, and 2 red marks for the 10-year Treasury yields. Now let's take a peek at the Dow Jones Industrial Average. And a look at the daily chart of the Dow Jones Industrial Average. Down below, point 1 shows stochastics are positive, but they are nearing overbought territory. We went ahead and gave this one a green mark, as things are still looking good here on the stochastics. And the MACDs, they're bullish, as the black line has crossed the red one, and the histogram bars are rising as well. We gave this one a green mark. And a look up top, point 1 shows relative strength index is rising, but appears to be getting a bit weaker, so we gave this one a little caution and issued a yellow mark. Down below, we see where the volume rose as we sold off, and it has dropped ever since we've been recovering here. That's not good. We're also up against the end of the quarter here, so I think a lot of the selling has tapered off a bit here as we're doing some window dressing here by not selling. There's no buying going on here. And a look at the weekly chart shows that point 1, the stochastics are improving slightly, but they are still negative. And when I say improving, they're in overbought territory falling, and the black line is starting to curve in on the red one, but it's not conclusive here and doesn't really show any kind of real strength here, so we gave it a red mark. And a look at the MACD shows they're bearish as the black line crossed the red on the way down. Histogram bars were also negative, but slightly. We went ahead and gave this one a red mark. And up top, the relative strength index shows that it's attempting to recover here. It's been falling. Gave it a yellow mark as it's, again, attempting to recover. Down below, though, volume shows is very unimpressive for a week of recovery here. Not a lot. We see that there's more volume during the weeks of sell-off than there are the weeks of buying here, and that's just not good. And so summing things up for the Dow Jones Industrial Average, we analyzed daily charts and the weekly charts. And we found on daily charts, stochastics and MACDs were positive. We gave them a green mark. Relative strength index was neutral. We went ahead and gave that a yellow mark. On the weekly charts, stochastics and the MACDs still indicated we had some down ways to go. We gave those red marks. And the relative strength index was neutral. We gave that a yellow mark. For a total, we had 2 red marks, 2 yellow marks, 2 green marks for the Dow Jones. And so we've been analyzing the U.S. dollar, the commodities, the 10-year Treasury yields, and the Dow Jones Industrial Average, looking for where the strength is and where the weakness lies. We're doing that by establishing scores based upon the number of positives versus the number of negatives, and coming to a logical conclusion based upon that. And for the week, we see that the commodities came in first place, CRB Index, with 4 green marks, 1 yellow mark, and 1 red mark. And coming in second place this week was the 10-year Treasury yields, where we had 2 green marks, 3 yellow marks, and 1 red mark. Coming in third place this week was the Dow Jones Industrial Average. We had 2 green marks, 2 yellow marks, and 2 red marks. Last place this week, we had the U.S. dollar. We had 1 green mark, 4 yellow marks, and 1 red mark. And take a look now at a market gauge. The object here is to be as far in the positive column on the right as possible, and as far away from the left in the negative column as possible. Commodities, the CRB Index, came in first place this week, so we've got that mainly in the positive column. 10-year Treasuries came in second, so we got that down in neutral territory, but it was ahead of the Dow Jones Industrial Average, which was flat neutral. U.S. dollar came in last place, but it's climbing since last week, as it was far negative in the left column last week, and is flat neutral again this week here. So I think what's happening is we're gaining some strength here in the dollar over the short term, and it's putting pressure on the commodities as they're starting to come down a little bit. Dow Jones Industrial Average, though, has been up, and I think on light volume here, it's because of the end of the quarter, and a lot of the selling from the fund companies has stopped. We've got the statements coming out here soon, and fund companies don't want people to see the statements badly damaged from this quarter. So I think what happened is they stopped selling here, and there's really no buying going on driving this rally higher here, so I think that's the evidence. Wait till see the start of the first quarter here and see if the selling begins again, because the weekly charts still indicate that it's pretty negative. Well, we're going to have a little fun here. As I said earlier in the show, we're going to do a little giveaway. Got something real cool here I think a lot of you might be interested in. We've got $100 trillion to give away here. You heard it right. Trillion with a T. And this is a real $100 trillion bill from Zimbabwe, and it just goes to show you what inflation can do. Back in 1983, the Zimbabwe dollar was equal to our US dollar, and here we're giving away $100 trillion. Be nice to have that in US currency, wouldn't it? Anyway, all you have to do to get this $100 trillion is go down below in the comments section there and just post your best guess on where the Dow Jones Industrial Average will close this Friday. The person who is the closest to where we close on Friday will win this $100 trillion bill. You can also enter more than once too by going to any of my other videos. Go to those videos and also post your best guess on where the Dow Jones will close, and you will also be entered again for this $100 trillion bill. Good luck to y'all. Hope you win. Thanks for watching. And stay tuned, because coming up next is our IBD 50 portfolio, and it was a good week at that.